All right, so this is PepsiCo on the monthly chart, and in recent months, price broke through and closed below the uptrend line that began all the way from the pandemic lows. And since then, price did bottom at what was support at $156, and now price is range bound. Now scrolling down to the weekly chart, you can see what I mean by price being range bound, just sideways price action for the better half of the last several months. Now you can see from these wicks here, we call these rejection wicks, looks like price wants to move higher, and each time it breaks above this box, it's actually absorbing some of the sell orders, the unfilled sell orders. So the chart suggests after bottoming and basing, price wants to move higher, at least retest the origin of the move down and the close below the uptrend line. And before we continue with the analysis, let's look at this article. So the best investment portfolio usually includes at least a few dividend paying stocks, and you can lock in a great yield by finding the ones representing great companies that are temporarily out of favor with investors. PepsiCo is one such company. Since July 1 of last year, PepsiCo shares are trading down almost 11%. Now compare that to the S&P, which has gained 16%, and Coca-Cola, which has stayed flat. Now Pepsi's stock is lagging for a few different reasons. The company has struggled with revenue and volume growth over the past year. It did increase prices in reaction to rising costs, which hurt demand among price-conscious consumers who are struggling with inflation across the board. We recently heard from Fed Powell the other day, where he anticipates 2 to 3 rate cuts this year. So that should help the price-conscious consumers moving forward. Now, PepsiCo operates a business that isn't exciting from a growth perspective, but it doesn't have many rivals when it comes to stability. That should be a priority for dividend stocks because those investments tend to thrive when the underlying business has predictable cash flow expansion. PepsiCo is a dividend king with 51 consecutive years of dividend growth. That's amazing. The stock currently sports a 3% yield after raising its quarterly dividend about $1.25 per share. Over the past decade, the company's revenue and cash flow have slowly marched higher with an annual average growth rate in the 3 to 5% range. Now, if the broader economy keeps improving over the next year or two, PepsiCo is likely to deliver suitable financial results. The company is forecasting 4% revenue growth and 8% earnings growth in 2024 after adjusting for the effect of currency fluctuation. Again, they get most of their sales from overseas, right? And right now we're still in a strong dollar environment. Acquisitions, divestitures, and additional reporting weeks that occur every 5th or 6th fiscal year. Now, PepsiCo isn't immune from the challenges moving forward, but it's a dividend powerhouse with a diverse business and strong competitive position that contributes to reliable cash flow. Its 3% yield at the moment, because of a reduced stock price, is a compelling reason for long-term income investors to consider buying. Now, kind of going back to the charts and going down to the daily chart. Again, you had a false breakout to the downside. You had a couple of false breakouts to the upside. And when I look at what current price is, I go up and to the left. This is the resistance that I see. You have a couple of pivot lows. And the reason why price poked its head out of the price bound range area was, we hit what was support is now resistance, right? Now you can see for the past week we did have some more basing. Again, potentially price is just basing. It's gaining momentum as it bases for that next leg higher. If you get candle closes above the 200-day moving average. That increases the odds that price wants to move higher. Now you could steep back down like we did here. There are no buy orders in this extended range green candle until the origin of the strong move higher, which is about 165. But again, I think that price eventually wants to move higher. And where would I take some off at the table? The 182 level, which is where we have resistance or additional resistance. And if you scroll out to the weekly chart, that is just below the origin of the breakdown that occurred back in August of last year. Thanks for watching. Subscribe, please like the video.